Alright traders, in this video I'm going to share with you an opportunity that I'm looking at on the euro dollar, and I'm going to share with you something that came up from someone who was using the forecaster tool to identify the best trading opportunities, and they said, what about the low opportunities? You know, I'm looking at setups that are not ranked as high on forecaster. So I want to share with you what I'm looking at and show you how you can still identify opportunities even on some of those lower ranked opportunities on forecaster. So let's first of all go over to the euro dollar. So I'm going to go to the quantum screener. I'm going to go to 1 month because I'm looking for a short time horizon, and I'm looking for Forex market. And you can see we've got some great ones up here, but down the bottom, right down the bottom, is the euro dollar. Okay, now it does say short, and it says 100% win rate. So what Forecaster's doing in terms of best to worst here is it's also taking into consideration seasonality and price action for a correlation score. So it's weighing up what the highest return was, what the strike rate was, what the percentage, the percentage return, and the correlation of price right now to historical seasonality as well. And all of those things will give it a high score. However, it doesn't mean that it's going to identify all of the best technical trades, and I'll show you that now, because right now I'm looking at 100% win rate on the euro, about a 2% return, okay? And I can see here that the open date is about the 13th, so that's tomorrow, right? Tomorrow. And if I was to stay in it until for about a month into April, that's a 2% return. I probably don't want to stay in it for about a month, but I'm going to check this out anyway. So what we're going to do is we're going to click on this button here. That's going to open up the euro, and you can see just on the last year there is this nice short, right? Now obviously it's looking at a month, and if you go even lower you could get even more of a return, 3% return. I'm just looking to catch a little short here, right? So I'm looking to catch a short. You could even look at just this, right? You could just look at this period here, and you can see almost a 1% return. You can see that the correlation isn't great, but again, we're not looking at that too much at the moment. 100% strike rate, but if we bring on some of the other seasonality, let's just bring on, say, the 10-year, right? This is where you can start to see that it declines on correlation, right? You've got a 50% strike rate, so it's 50-50. But let's take a look at the chart. Let's just go over to the chart. So just using good old technical analysis, what I'm seeing here, whenever I see these big runs, this is the 4-hour time frame, by the way. Whenever I see these big runs, I know that it's not likely that this is going to go on forever without some kind of relief, pullback, correction, right? A rollover, a sell-off, whatever you want to call it. And whenever I see these big bullish moves, what I'm looking for is some kind of indication in price action that it's likely to roll over. Now, just based on my own discretion and the amount of time that I've spent in the markets and the amount of testing that I've done and the amount of reps that I've put into the market, I know certain patterns very well. And one of the patterns that I like to look at is an ascending channel. If you go out onto my TradingView ideas page and you look at historically some of the ideas that I've put out on TradingView, particularly on the pound yen and Aussie dollar, you'll see lots of these ascending channels and descending channels. And what they are is price starts to slowly move up in this ascending channel formation, putting in higher highs, and then eventually and the lows are parallel, right? So you see this nice parallel movement with the highs and the lows as we move diagonally in this ascending channel. And what I wait for is a retest. So a final double top retest, which we've got. So I've got about 15 minutes until I can enter this. But if we close here, that would be great. Obviously I don't want it to push down too far, because what I'm looking at is a potential target of the start of the channel. So this low here at 0.783 would be where my target goes. And that's where I'd be taking targets, but my stop loss would be an ATR above the high. So that means as long as we don't push down too far, it's going to be a great reward to risk profile. But you don't just trade directly off of that. What I like to see is structure. So first thing, you can see this rejection candle here. What I'm going to do is just whack a horizontal line in there and go back historically. And would you look at that, right? we are right at that previous 3-bar reversal that took place in November. We pushed up to that level. We saw this big bullish move. We had a doji, a bit of indecision, and then this massive sell-off at that level, at that 0926 level. Had this big 3-bar reversal rollover, and we haven't tested that level again. We've been bearish, and then we went into a bullish mode, and now we're putting in, not only have we had a big bullish run, we're now putting in an ascending channel, right, which is a relief pattern right at that previous structure level, and the retest is at that level. So the last thing I'm looking at, as we push up for the ascending channel, you can see that we've got this divergence on RSI. So we went overbought, which is a great indication, and then we've got divergence. We've got lower lows on the RSI, or lower highs on the RSI, and higher highs on price. That is a great indication, right? So what I'm looking for here now is about 13 minutes time. I'll be placing a trade. As long as we don't break and close above this high, I'll be placing my at market order on this, the close of this candle at market, wherever that closes, as long as I get a 1-to-1. If we then roll over, like if this candle rolls over down here in the next 10 minutes, I won't be taking it, right? But if we close up here somewhere reasonable, or more than a 1.5-to-1, that's going to be great. So even if we just close here in the next 10 minutes, you know, you're talking about an ATR based stop, an average true range in pips over the last 14 days, right, is going to be, you know, somewhere around 71, right? And then my target's going to be down at the lows, right at the start of that channel. So 1.7-to-1 reward to risk profile, which will mean if I risk 1% on this trade, it'll be 1.75% return, which is great. So, and that these typically play out pretty quick. So I wouldn't expect targets to be hit or to take more than 2 days to be hit. Tomorrow's probably where you'd be looking to get out of this, if not today, right? So tomorrow, worst case, and you usually see a quick roll off, and then the market continues to consolidate for a bit, and you're out of the trade, so you don't care. So this is an ascending channel. You can go and check out more ascending channel stuff on my YouTube channel. I've done loads and loads of videos on ascending channels. It also works in the opposite order, descending, you know, if you're looking at support. But this is just an example of something I'm actually looking at based on technical analysis. And yes, I've got some confirmation that there's a shorting opportunity here, but I'm not going solely off of that. When you combine the two of these things, that's when you're going to get the really, really hot opportunities, right? But there are going to be times where your approach, you know, your historical approach to trading doesn't necessarily match up with Forecaster, right? You don't want to, the message that I'm trying to get across is you don't want to force things into your trading, right? You want to develop your trading to suit you. And then if other things line up, if there's other confluence or confirmation factors, then amazing, that's great. You might start to dynamically adjust your aggressiveness in target taking, or your aggressiveness in entry, or your aggressiveness in stop loss positioning or trailing stops, but you don't want to you don't want it to change your trading. Does that make sense? Hope you found that valuable. Let me know if you've got any questions on this, and let me know if there's anything you want to learn in particular in the comments. I'll happily do a dedicated video to whatever you want to learn. I read all the comments and I reply to them all, so leave me one now. If you haven't subscribed already, make sure you do that, and I'll see you in the next one.